evening, all. Ira Epstein of Linn Associates with your financial market wrap-up, and this is for the evening of Wednesday, December 11th, 2019, and we're just after 5 p.m., which means you're already seeing trading taking place for Thursday, December 12th, and that's what you've got. The markets are up a bit right now, gold up a little bit, and I want to remind you, if you'll do me a favor, and a bunch of you have responded, ETFs that you might want me to cover in my next video that I'm putting out, which will just be an ETF video, limited purely to that type of subject. You'll be seeing me starting to practice with those very shortly, and I'm not saying it'll be before the holiday. Internally, I will be doing them. Externally, I'm not putting them out just yet, but I'll wait to see when I do. I know I'm out of town right around Christmas, so when I come back, it'll probably be it. I'll be here for the new year, but we'll see what we do. But today was FOMC day. Tomorrow is the Brexit vote day, and by Sunday, we have to hear what President Trump decides in the terms of tariffs going on, not going on, additional ones I'm talking about on China. Or is there a phase one deal that surprises everybody? I don't know. Nobody does. On the FOMC, the market responded very favorably because out of the 17 members of the Fed, basically, I think it was 13 of them don't see an increase next year, 4 do. We'll see what that brings to the table. But in any case, that's the dot plot. The Fed is concerned, and rightly so. What about the Phillips curve? That's basically what it is. In other words, you're at 3.5% unemployment in America, the lowest we've been in generation, basically. And you're looking at the market, and you wonder, why is there no wage inflation? He described the event as globalization. I have been saying on television for years, a couple of them now, technology the Fed hasn't taken into account. I think his term globalization is the same that I mean by technology. I was listening to him talk, and by that, it means pricing powers to a certain degree. You can't do that. I mean, you go on the internet, you look at one price, how many times do you shop for the same good? And that hurts producer prices from going up to a certain degree. There's a lot of free services on the internet. The internet itself is free in most cases. So, questions about that. But then you've got the other hard goods, and you have to deal with that part, and that becomes an issue. Other than automobiles that keep going higher and higher price, most goods that you look at, forget services, most goods, they're not going up that way. So we look at the dollar that fell today. We see foreign currencies as they've reopened tonight. They got ahead of themselves a bit. They're pulling back. But remember, they have to deal with Brexit and the event coming up, which is the U.S.-Chinese trade tariffs. What's going to happen there? On the S&P for the week, you're down 1.7 points, 75 points on a closing basis. Basically unchanged. When you look at the action that's here, you can see how the market went up to the old high area from this break, and it sort of stalled out. I was on Fox today, and I think I said 3 sentences because that sums it up. I'm still looking for the Santa Claus rally. Teddy, one of the other people on, said, well, he's been in it all year. I can't deny that. Can't deny it at all. But the percentages, barring if we get the tariffs put on by Sunday, barring that, I think favor the stock market still trying to work higher. The FOMOs, people that think they're going to be left out of things. And that's the fear of missing out. As you take a look at the December futures, you still have a pattern of lower highs, but now you have higher lows. So you've narrowed this market into a very narrow corridor here. Support back at the 18-day average, 31.2650. If the market takes out 31.51, which is only 6.5, 7 points away, what that would do is it turns the pattern to higher lows, higher highs. So I'm looking for the 18-day average to be important. Where would the bears grab control of the market? Maybe we should look at that too. I believe that if you got back under 31.16 without taking out 31.51, the bears would then have the lower highs, lower lows, reinforcing new lows in the market, and that could give them back control of the market. So I have a number in my head that's about 28 points away that I don't want to see taken out. What about resistance on the upside? The upper Bollinger Band at 31.61 is that number. So we'll see if the market can get up there and what it does. In terms of momentum, the market is overbought. You've got, with tonight's action, prior to tonight, you have an 81 reading. Now the close was also with both numbers over the 70 level. So we have an overbought condition. That was how you finished today. Lower highs, higher lows. You're fighting at the 18-day average of closes and haven't answered how that's going to be resolved. In the NASDAQ, we have the pattern. Lower highs, higher lows. Same thing. Overbought condition. 18-day average seems to be the key number here. Resistance back at the 84.62 area, let's call it that. The last rally high in the market was right here at 84.27. So now the question is, can the market punch through that? It's at 84.07 right now. But as I said, narrowing in, and that's very important. Dow narrowing in. Lower highs, higher lows, fighting at that 18-day average of closes. Now, tonight, the Judiciary Committee at the House, I understand, is set for a vote on what they're going to do in terms of the impeachment. I don't think the market's paying attention to it. In fact, I think the marketplace, in terms of the impeachment, expects it to go to the Senate, and the Senate's telling the president, no, we don't have to call any witnesses. We've predisposed that you're not guilty. We have the majority. That's what I think's going on from everything I'm reading. So I'm not looking for that to be an impact on the market. In the Russell 2000, you've got the pattern of an overbought market in an uptrend, higher lows. We don't know what this is going to do. If you look at that high, I'll come right here. This high was 1640.30, and so far you're close to it but haven't taken it out in the 1637 level. The slow stochastic study has two numbers over 80 tonight. Both numbers closed yesterday over 80, but not the day before. So you can't embed right here. So I'm just looking at an overbought market that looks bullish, trying to make a year-end push. We'll see if it gets reason to do so. In the VIX, I wouldn't be surprised if the pros, and I said this yesterday, were starting to sell against this upper Bollinger Band. The first support for them, if they did so, was the 100-day average, and it went there today. Now, if this market decides that stocks are going higher, this VIX probably pulls back to the 18-day average. It's not trending here. You've got a lower low and a higher high. When I come into the T-bond market, we have a pattern of a lower low, a higher high. It's basically a mess. It's caught right at the 18-day average, and you've been stuck at this 18-day average for 1, 2, 3, 4, 5, 6, almost 7. That's almost a business week and a half just sitting there waiting to see what the next event is. In the 10-year notes, we saw the yield fall down to about the 178 level today. The pattern is interesting as can be. You've got a lower low and a higher high. I don't know what you do with that. It's not quite gotten to that 18-day average of closes. We're narrowing in these Bollinger Bands, and I understand what the market's doing. If you think about it, what do you do about the U.S.-Chinese trade? If you get another round of tariffs, will people run for the security of Treasuries right away? Will the stock market break on that news? Don't get it. Does that mean an extension, or you hit a phase one deal? Phase one would be euphoric in the market. An extension doesn't tell you much of anything. As we come over, and let's get this up, the TLT, I think it'll come in right now. There we go. We've got a pattern. I should remove this. I forgot to do it. You've got higher low, higher highs. You're over the 18-day average on a close. The next resistance, 140.43. I don't know how I missed that, but I did, because yesterday we had an outside day up, and I'm sure I talked about it here. When we come to the dollar index, it's riding the lower Bollinger Band. So it got under it back through here, threw itself back over and right back under. Now, you're also very close to getting what we call a moving average reversal. In other words, a crossover, where the 18-day average of closes is about to get back under the 100. And we haven't done that. You see me moving back here for a very long period of time. That is a bearish signal if it occurs. It should, as I see it with this close, should happen right on the reopening of the market tonight. In the eurocurrency, which is already open, the dollar index trades on the ICE exchange. The other currencies trade on the Globex, so there's different time openings. You've got a lower low, a higher high. That's not a trend. You're overbought into a key resistance area of a combination of the 100-day average in the upper Bollinger Band. You also have a lot of risk here and in the pound. Which way is that election going to go? The polls show everything narrowed in. Now, they're polls. I don't know which way the populace is going to vote. It's going to be very important to see what the next steps in Brexit are. In the British pound, you're down a little bit tonight at 130.09. You have the bullish embedded reading. That is when both numbers that make up this stochastic momentum oscillator, if you will, get over 80 and stay that way, which tells me until the red line crosses back under, the bulls are buying on breaks. However, this oscillator, as good as it is, going into a major event like this election, I'll let you figure out what to do. You know, I have my own ideas on major reports, and one of the things I teach in my charting course, why go through them? Why stand on a train track looking at the train coming at you when you can easily sidestep and always get back into the markets? You'll say you missed the opportunity, and I say it's like an airplane schedule. There's always another one coming. When I look at this market, the yen, it is just stuck at the 18-day average, and rightly so. The yen is one of the popular areas that people run to as a safe haven. You tell me what's going to happen in Brexit, and you tell me what's going to happen right now by Sunday on the U.S.-Chinese trade deal, and you can probably figure out what you want to do with the yen. But right now, it is stuck in sideways action. It has upside bias. It's got the swing line up, higher highs, higher lows. It's over the 18-day average, but it is very overbought. Then we get to Bitcoin, which is still in a bear trend. Lower highs, lower lows. Momentum is just flat in the market. Supports back at the 67.90 level with resistance at the 7,500 level. I don't know what happened to that chart, but it's the crude, and it's basically the Feb WTI with the Brent and the differential. And you can see it's about $6 here. With our Brent crude, we have lower highs, lower lows. That's no trend. The EIA data today was very bearish. And as I said, I didn't think the market could crash much on the first day of the Saudi Aramco deal, which came out and went very well. The company's close to being to the $2 billion value that the royal family wanted it to see. It came out today and jumped about 10%, and it went limit up, as they call it, on their exchange. And we'll see what happens as more funds have to get involved in the market. And they're forced to if you're going to trade the ETFs and so on. They've got to accumulate shares so that they properly represent whatever they've decided to include. But the market overbought, stalled out. It's neutral now. You got lower highs, lower lows over the 18-day average and overbought. In WTI crude, you're still holding on to the uptrend. Higher lows, the other was Brent. Higher high, but very overbought, sort of stuck right here. The market just sort of hanging on, supports back at the 57.60 level. In the gasoline, well, you broke down. Now, if you look at this high, that high is 166.90. This high was 167.12. So, and I thought I had corrected this, but you've got lower highs, lower lows, resistance, the 18-day average, momentum flat. The bears grabbed control of this market today is basically what I'm saying. I don't know why some of these changes didn't stay. And in the nat gas, I had written last night for my traders that I was wondering if the market was going to try to get here to a gap. Now, the gap left in this chart, 231.30, fell to the lower Bollinger Band. Markets typically like to fill gaps. It made a two-day run at it, and today just couldn't hold up. There's still too much supply. Tomorrow we get the EIA report. That might give you the reason to fill it, but there's nothing looking bullish on this chart still. I want to remind everybody, I need two events from you. Number one, if you're interested in me doing these ETF videos, and it will be at the end of the day a subscriber video, I'm going to be able to do them, and I was thinking about it, I'll be able to do them before I even go home if I want. Remember, ETFs don't open typically to 8:30 in the morning, Central Time. So I can get them done, and you can have them the night before or very early in the morning, and I'll have no problem putting those out. Then our Cyber Week sale. That's ending this coming Sunday. So if you've been looking for a way to get my charting course, if you're looking for a way to get a deal on my research subscriptions, this is the time to do it. The course is included free up until Sunday. After that, the price is back to whatever I set it, and right now it's $179.95. So in looking at it, let me explain the course. The course is made up of videos. It's made up of the charting software that we have. You're going to learn my 5 different indicators that I put together. Window envelopes is very important. You don't see it in any of these. And I'll give you all the little tricks that I've learned over the years in these videos as to how I work with Bollinger Bands, slow stochastics, and the like. As I said, 54 videos, about 5.5 hours worth of videos. You need not take the course right now. You write us, let us know when you want to begin it, and away you go. So that's an advantage for you. You purchase any of my research packages. They start as low as $156 for a year, and you get this thrown in. You decide which one you want, commentary only, the morning video, or the whole package of commentary, written trade recommendations, and access, and I've got to bring this up again, to my special reports, which I'm going to do a lot of. I've already done about 4 just in September, and especially for those of you watching the gold market, I still think my last gold one was a pretty good one at this point. How do you find out about this? All you need to do is go to our website under the word research. Don't look for the gold report. They're only up 5 days at a time, and then I pull them. I'm not meaning to be a history lesson here, and that's not what the intent of them are. And if you want, you can call my staff in the morning or tonight, leave a message. We'll get back to you and get you all set up on this. You can click up here if you see this icon also. It'll take you right there. In the meantime, I'm Ira Epstein. I'll speak to you all tomorrow.